Hello and welcome. In this video, we will learn what net asset value is, okay, or what NAV is. Now, before I explain you what NAV is in detail, let me quickly explain it to you by taking the help of share price. Okay, these are all the shares of different companies, and these are all the prices of these shares. Okay, you can get this data in any brokers. Here, for example, this is ICICI Prudential, and one share of ICICI Prudential is worth or is costing 521 rupees 45 paise. Okay, this is as of date of making this video. Now, if you want to buy one share of this company, you will have to pay this much rupees. Okay, so this is share price. Now, when we come to the world of mutual funds, we have units. Okay, here we have shares, there we have units, and the price of each unit is called as net asset value. Here, price of each share is called as share price or current market price. Price of each share is share price or current market price, whereas price of one unit of mutual fund is called as net asset value. Alright, now let me go and explain in detail as to why net asset value is required. Okay, now first I will take the example of shares. Let us assume that this is you, and you have 1000 rupees which you want to invest in the market. Let us say that on January 1st you buy shares of different companies. Alright, you buy shares of Infosys companies worth 300 rupees. You buy shares of Yes Bank worth 100 rupees. You buy shares of IRFC worth 400 rupees, and you buy shares of Zomato worth 200 rupees. Okay. Now, how many shares of Infosys do you buy? Do not worry about it. Okay. Do not worry about the number of shares. Just know that you have bought 300 rupees worth of Infosys shares. Alright. So, on January 1st, your portfolio would be 1000 rupees. Okay, how 1000 rupees? 300 plus 100 plus 400 plus 200 rupees. 1000 rupees. This is what you have invested. Okay. Now, all these figures are dummy figures. I have taken small numbers so that the math will be simple. Okay. Alright. Now, as of 1st Jan, this is your portfolio. Let us say that on 2nd Jan, this becomes your portfolio. Okay? You know that the prices of shares move up and down throughout the day. And let us say that on 2nd Jan, these are the prices or worth of these shares. Infosys shares which you had bought for 300 rupees yesterday are worth 400 rupees today. 100 rupees Yes Bank shares yesterday are worth 200 today, and so on. Okay. So totally your portfolio is 1400 rupees. Yesterday it was 1000 rupees. Today 1400, meaning 400 rupees is your profit. Now this entire profit belongs to you and you only. Correct? This entire thing, this entire money belongs to you. Let us say that on 3rd Jan, this is your portfolio. You know that prices move up and down. and it has went down today on 3rd Jan. So this is your portfolio. Your portfolio, which was worth 1000 rupees on 1st Jan, is worth 600 rupees on 3rd Jan, meaning you have a loss of 400 rupees. Even then, that loss is entirely yours. Entirely yours. Okay? So this portfolio belongs to you and you only. Okay? So this is the condition of shares. Now, when we come to the world of mutual funds, it is not like that. You know how mutual fund works, right? Mutual fund company or asset management company collects funds or money from various people, hundreds or thousands of people, and then they invest the money in various assets, either shares or bonds or commodity or anything else. Okay. Now, here in this example, I am considering there are 5 people who are investing in this mutual fund. Okay. So this is mutual fund, and in this mutual fund you have invested 100 rupees. This person has invested 200 rupees. This person 100, 300 and 300 rupees. And let us say that these people along with you have invested the money on 1st Jan. And on 1st Jan, the fund value is 1000 rupees. Okay? How 1000 rupees? Add all this up and you'll get 1000 rupees. So as of 1st January, the mutual fund value is 1000 rupees. Alright. Now, you know that prices of shares or commodities go up and down, or assets go up and down. And let us say that on 2nd Jan, the value of this mutual fund is 1200 rupees. Okay. On Jan 1st, it was 1000 rupees. People had invested in mutual fund, and on Jan 2nd, it is 1200 rupees. Meaning, the mutual fund that was worth 1000 rupees is worth 1200 rupees today. Alright. Now the question comes, how much has this 100 rupees grown to? Okay. Yesterday on Jan 1st, you invested 100 rupees. Today, the value of mutual fund is more. And now you want to know how much has this 100 rupees become. Okay. In the same way, this person would like to know how much is his investment worth today. Same goes for all these. Now we cannot say that directly, correct? Because you have invested only 100 rupees. This person has invested 200. This person has invested 300. So all of you have invested various amount of money. So we cannot say directly as to how much this has grown into. And this is the problem in mutual funds. And to overcome this, we have net asset value or NAV. Okay. Now, what happens is, in new fund offer or new fund offering, the company fixes the NAV at 10 rupees per unit. Okay. Now, what is new fund offer? New fund offer is like an IPO for mutual fund. You know that companies give out IPO, correct? When they offer shares for the first time. In the same way, new fund offering is what the company does, asset management company does, when it offers a mutual fund or a new mutual fund for the first time. Okay. And in the new fund offer, the company fixes NAV at 10 rupees per unit. Okay. Now this is the standard that is followed in India. Now this 10 rupees doesn't have any intrinsic value. It is just used as a reference. Okay. So the company fixes NAV as 10 rupees per unit. Now what is this unit? It is unit of mutual fund. Okay. Just like you have shares of a company, you have units of mutual funds. Okay. Now, units are given to the investors according to their investment. Okay. Once again, units are allotted to the investors according to their amount of investment. Meaning, you will get 10 units, this person will get 20, this person will get 10, this person 30, and this 30. Now, how did you get 10 units? You had invested 100 rupees in the mutual fund, correct? And at the time of offering, new fund offering, the price was set to 10 rupees per unit. So 10 rupees and 100 rupees gets you 10 units, or 10 units into 10 rupees is 100 rupees. Similarly, this person had invested 200 rupees and so he gets 20 units and the rest. Alright. So according to the investment, the company allots the units. Now, this is as of January 1st. Let us say that as of January 1st, these are all the money that people have put into the mutual fund, and the fund value is 1000 rupees, or the asset value is 1000 rupees, or the mutual fund value is 1000 rupees. Okay. Now, you know that the fund value keeps on varying. What do they do with this 1000 rupees? They invest it in various assets like stocks, bonds, or commodities. Okay. Now the prices of those keeps on varying, and let us say that on January 2nd, the asset value or mutual fund value becomes 1200 rupees. Okay. On January 1st, it was 1000 rupees, and today it is 1200 rupees, meaning the mutual fund has grown by 200 rupees. Now, the question is, how much has this investment grown to? Or how much has this 200 rupees grown to? To calculate that, we need to calculate the net asset value. Okay. The formula for calculating net asset value is this. It is the current asset value, mutual fund value, divided by total number of units, which is 100. We are assuming that the number of units is constant. Okay. I'll come back to this later in some other video. Now let us say that the units are constant. So total fund value 1200 rupees divided by number of units, that comes to 12 rupees. So this is the net asset value of the mutual fund. Okay, 12 rupees. Net asset value of the mutual fund was 10 rupees yesterday, but today it is 12 rupees. Okay. Now we can calculate the growth of this using this net asset value. Alright. So how do we calculate? We just have to multiply the number of units with the new asset value. So 10 units into 12 rupees gives us 120 rupees. meaning your 100 rupees is worth 120 rupees today. Okay, 100 rupees that you had invested yesterday is worth 120 rupees today, or your 1 unit which was worth 10 rupees yesterday is worth 12 rupees today. Here this person had invested 200 units, 200 rupees, and so he was allotted 20 units. So 20 into 12, 240 rupees. His 200 rupees of investment has grown to 240 rupees. Here 120 rupees, here 360 rupees, and here 360 rupees. Okay. So this is how net asset value is calculated. Net asset value is the price of 1 unit of mutual fund. Okay. Now let us say that on January 3rd, the asset value becomes 900 rupees. 900. Then this would be 900 divided by 100. So net asset value would be 9 rupees. And if we calculate the value of investment, then 100 rupees becomes 90 rupees. Okay. So this is how net asset value is calculated, and it is calculated every single day at the end of the day. Okay. More about it in the later video. Alright. So I hope the concept of net asset value is clear.